Hey, y'all. This week on our show, we are talking about some results from last week, which include Dick's Sporting Goods, Dollar Tree, GameStop, and more. And since we talk about several stocks here each week, be sure to check out the chapter feature listed below to help you search for any specific stock that we talk about this week. Let's get started. Hey, everybody, I'm Jeffrey Beamer, Senior Investment Strategist over at ewotrader.com. Welcome to Earnings Call. This week, we're going to jump right into it. We're going to begin talking about, Dick's, all right, and see what Dick's came up with last week for results. And you can see here they blew past their earnings estimate, but the stock reacted very poorly. The stock actually gapped down over 11%, rallied during the day and closed only down 4%. But as you can see here, the stock continues to sell off and is well below the low from last week. So we're down really after post earnings, we're down about 12.5% post earnings. So not good for the retailer, even though the results are good. It was really focused on their outlook and what they see is coming up after the election. I don't know what that's telling us, but for them, it wasn't so good. Then moving forward, we have Dollar Tree. Dollar Tree cut its full year outlook. It just wasn't any good, any good for Dollar Tree. This stock really just, let me get the chart up here. They have had really a hard time lately. And you can see here the stock gaps down, plunges over 22%, and then is just trading dead right now, dead sideways since that earnings announcement coming right here. So it essentially, gap down, a 3-day pause, and then another gap down going into earnings. Just a bad type of trade for Dollar Tree. Good trade for us, but not for buy and hold investors. All right, and lastly, here on looking at trades from last week, we have Broadcom, and Broadcom, as you can see here, it closed right at the estimated move of 10%. And this is one of those things. A lot of traders and a lot of people in the investment industry talk about that it is an efficient market out there. It's very hard to find an edge. And one of the places I do find an edge on a consistent basis is around the earnings announcements. Broadcom, as you can see, it moved kind of its estimated move, but some of these other stocks did not. They moved greater or less than their estimated move. And that's where we come in with our strategies and really analyze where do we have the edge in a particular trade. All right. So let's take a look at what we have this week. We're on the back side of earnings season right now. It's very light. We're only focused on about 23, 24 stocks in total this week. And I've highlighted some of the bigger ones here that include Oracle. If we take a look at a chart of Oracle here, Oracle will have earnings today after market close. The recent historical move on Oracle is a little over 13%. So given the space that this stock is in, we could see a little bit of volatility after the market, and we could see this stock break out either up or down. Now, here's the thing. Any of these stocks that are even remotely close to AI are being pretty much dismantled right now. Traders are taking profits. They're exiting the stocks, looking for their next investment. And so we could see, depending on what Oracle has for their outlook, we could see some definite moves there. Now, a stock that's often in the news is GameStop. So let's take a look at GME here. We have a stock that, again, its estimated move is going to be about 10%. I don't have that labeled on this particular chart, but you can see here back the last earnings cycle actually is right in here, this little area. I have this little area right there. I'll drag that over. That was their last earnings announcement. This previous spike up was the Roaring Kitty incident, and then we went into earnings. We had a lot of volatility, but believe it or not, the way this is priced right now, this is priced, I think, for the estimated move. It's right around that 10% number, which is the average, and that's where the options are coming in priced right now. Another one that I would look at is Adobe. All right, another kind of tech stock. This has a historical move, a greater than 11% for Adobe, and we're expecting some volatility. You can see the last earnings event was back here, okay, and we had that nice big gap on that earnings event, expecting kind of the same thing here. Now, Adobe will have earnings on Thursday. Also, Thursday's kind of a big day. We have several movers there, as you can see on the chart or on the earnings call that I have. We had Signet, Adobe, and finally Restoration Hardware. All right. And we'll get to Restoration Hardware here in just a moment for an upcoming trade. Lastly, that I'll talk about here is Kroger. Now, Kroger is interesting. Historically, this is on the quiet side. Okay, these are candidates that they don't move very much. They're mature. They're mature in their corporate life cycle, and they typically don't move very much. We're looking for a move of around 5% for Kroger. The one thing I would caution here are I see a little bit of volatility coming in to these names, possibly, and that deals with pricing and consolidation amongst the grocers as they continue to acquire or be acquired. This sort of news could really cause some volatility in the stock. So I would pay attention to the news for something around, the Albertsons or the Krogers, that sort of thing right now. And I would caution you, but the estimated move for that right now is well less than 10%. It's actually around 5% for Kroger. All right. So, given that we didn't have a session last week because of the Labor Day holiday, we took the day off like everybody else and enjoyed a nice long weekend. But our subscribers did have trades last week. All right. And I wanted to show you one of those stocks that we just talked about, and that is Dick's. All right. Dick's was a trade that we came out. I will show you. This was a trade alert last week for our subscribers. All right. The stock, we put out an alert. The alert ID was 1255. This was a long strangle for our subscribers who subscribe to our Delta Neutral Breakout publication. And the stock, the alert went out. And you can see kind of an example of it here. It gives the strikes and a little commentary, and also the chart image that you see here that gives very specifics in the trade. So I wanted to kind of bring you up to speed on where the stock is. And you can kind of see it right here. This is as of last night. We were up around 10%. Stock trading at 200 and with a $230 profit. However, if we pull up the stock once again, and you can see that we're trading down at 205.60, and that's down below the lows on earnings event, that profit's going to be a little bit more as we hold on to that particular trade. I have not given exit instructions on it yet. We're holding on to that trade. And right now, as you can see on your screen, when I took this snapshot, we were up about 10.4% in 6 days, moderate gain. But again, we're sticking with that trade right now, and it's even lower. As you can see, when that snapshot was taken, we were at 206.54, it looks like, and we're right now trading at 205.75. So additional pressure to the downside. So that was an example of trades that go on during a holiday week when we don't really have a show. All right, just wanted to let you know that is available. You can also download my guide if you want to see how we trade these each and every earnings cycle on particular stocks. And oftentimes they're the same names over and over and over again. You can download that guide at ewotrader.com/straddle. And it's a free guide to show you how we trade earnings announcements. And specifically with this guide, it's about these stocks that break out, that are going to have big moves, potentially big moves, and we are going to profit on those big moves. All right. Now, speaking of big movers, let's talk about our trade of the week this week. All right. We are going to look at Restoration Hardware. All right. Believe it or not, this stock is a big time mover. And we are going to put a little strangle on this. Okay. Now, the strangle is a little bit more expensive than we often like to do. It's going to be about $3,600. So this is really for accounts that are a little larger. I would say if you a minimum account size for this would be around a $30,000, $40,000 trading account. You don't want to take overly large amounts of risk with these trades. And since the debit's up there around $3,600, you need a bigger account. So if you have a smaller account, I would just sit and watch this particular opportunity this week, as this stock usually moves around 14 to 15% through earnings. And this stock will have its earnings event after market close this Thursday. So there's plenty of time to do some analysis and look for a trade opportunity here. But we are expecting a breakout. And if the option market makers, last time I checked, they were pricing the move around 8%. Okay. And this gives us an edge if we are going to put on this type of a trade, given the historical move of the stock. All right. So that's it. That's our wrap up for this week. Everybody have a great trading week. We will see you right here next Monday. Take care.